Okay, let's go. Welcome to chapter 3. And in this chapter, we will deal with something called cost price calculation. So, this is the introduction first. We have already tackled the thing about general accounting, and we saw something about the balance sheet, about the income statement. All of this information is available to the outside world. You know that people like shareholders can access this information. So all of this happens within the box, but will be shared with the outside world. Now, in this chapter, we will deal with something called cost accounting, and we will see that this will often happen off the balance sheets. So this will not be available to the outside world. Thing is, I already see that this chapter was missing apparently, so perhaps I can add this one in so it's okay for the next session. Let me check that again. There we have it. So this chapter, cost accounting, zooming in on the cost price of the product. This is not so convenient because we all know if you want to make a product, you will have to buy raw materials and you will create something new. Well, things like electricity or water or even wages of the people that worked on the product itself, well, all of this has to be included in the final cost price. So that's the goal of this chapter, finding the final cost price. Now, we're still dealing with the introduction over here, and we have two main kinds of companies, the industrial one and the trading company. So a trading company will simply buy goods and they will resell them or they will sell them for a different price. Maybe they will do something with it, but this will be like not that much. And in the end, they will just like sell these goods. So they might buy all of these in bulk and they will sell them again. Think about a um, a warehouse shopping center thing like Carrefour or something. Okay, so they buy all these goods and they will resell them to the customer. So the input as a start of this process, so they buy everything, and the output is what they finally sell. Um, all of this, and as you can see, will be available in the balance sheet, in the income statement, will be available to the outside world. Nothing too difficult over here. Um, but the industrial company is a bit different because they will buy materials and they will create something entirely new. So they might buy wood or iron, and they will use electricity and water to transform this product, and this final product will be sold to the customer. So this process is way more complicated, and in these kinds of companies, it's very crucial that they know the cost price. So in this case, we will use something called cost accounting, something that will happen off the balance sheets. So not on them, it will happen next to the balance sheet. This will not be um, like visible to the outside world. This is really something that stays within the company itself. You don't need to know these schematics over here. Just know that these guys, the industrial companies, will do way more than just buy and sell. They will actually go through a production stage or phase, and they will have to calculate the cost price. And we will see in this chapter why that's so important. Now, we learn the following from these different images. The shared characteristic is that they both start with something like input, and they will both end with output. But the process between those two is entirely different, of course. So Carrefour is a trading company, actually. This will fit the description of a trading company. And a bakery will actually buy things like flour in order to make a final product like cake or bread. All right, so these guys are completely the opposite of each other. I know that the Carrefour also has like a bakery sometimes, but don't go that far. Just know the difference between these two. A bakery really has to know the cost price per unit in order to make further calculations, and we will see why that's so important later on. Okay, so the difference between the two was about the production process in the middle. Here we have it, the production phase itself. The cost price calculation, once again, will not happen within the balance sheets. It will happen outside of it. That's why we call it off balance sheet, sometimes abbreviated as OBS, off balance sheets. And the Dutch word of cost accounting, the thing that we're going to deal with, cost accounting, is called AEB or analytisch. Ik heb hier een fout gemaakt, zie ik juist. Exploitatie boekhouden. Dus niet analytisch, weer bla bla bla. Dus be careful. But we will just use the word cost accounting instead of this long word in red. All right. It will coexist. This slide is full of mistakes, apparently. It will coexist with financial accounting. Now, I will exit my PowerPoint and I will adjust these mistakes and then we can go on. Okay, that looks better. Okay, continue. Okay, cost accounting, the thing that we're going to do in this chapter once again, versus financial accounting, the thing we did last semester. So the audience is the very first one. I will give you like I think 5 differences right now. Um, it's kind of useful that you know all of them actually. So the very first one, your audience when dealing with financial accounting, you're doing things with your balance sheet and with your cost and with your income statement because you need to do this because the government tells you so. It's important because people like your stakeholders, they want to know this information. So the goal or the audience of financial accounting is meant for the stakeholders, is also meant for people within the company, of course. The thing with cost accounting is different. Over here, you will use this information within the company itself. You will not share it. You can always share it, but you have no incentive to share it. And this will often be used by your managers, your CEOs, because they will use this information to take decisions. Once again, I see a mistake on my slide. Let's ignore that. That's very important to realize that your audience is completely different over here. Second one is about the level of detail. So the financial accounting is about reporting results of the entire business, once again, to the outside world as well. It's quite like detailed, but the cost accounting is way more than that. It's very highly like detailed, and will report about specific topics like the cost of individual products. It's very important that the company exactly knows what the cost is of a certain product because they eventually will need to set a price, and it's important that the price will be higher than the cost of the product in order to generate profit. So the level of detail is insane in this last one. Then we have the product costs. So the financial accounting, we will actually use all this information to put it on the balance sheet, meant for reports to the outside world once again. But the cost accounting will really dive in very deep regarding the product costs, and they will compile information about the costs of raw materials, secondary materials, finished goods in the inventory, the valuation of semi-finished products. Um, all of this needs to be valued, and this is not convenient. So cost accounting will look at these guys um, like using a very like high detailed eye, and they will look at it like that. Okay, so not too important, this one, in my opinion. This one is important because I think you all realize that accounting, especially the financial one, is mandatory and you have to do it as a company. You have to follow certain rules, certain principles, and standards. You have no choice in this matter. While cost accounting is actually something you do on your own. There are no set rules, there are certain approaches that are like standardized and people will follow these approaches, yes, but there is no one specific approach. You can choose how you deal with this, There is no framework that tells you how to do it. Okay. Report timing. We all know, once again, that we have to report the financial accounts. Um, but the cost accounting, there are no rules regarding that, but it will happen anytime and on a frequent basis. We all know that the environment always changes for companies, and they need to take like decisions quickly, and these decisions might be taken based on cost accounting. And if raw materials increase in price, this will have a large impact on your company and on your cost accounting. So this has to be changed like all the time when something in the outside world changes. So this will happen on a frequent basis, the report timing. Okay, um, this is the introduction. I will stop right here already because in the next one I will dive into the key concepts that we need to learn about. So this video is 10 minutes long. I think that's long enough for now. So if we look at the textbook right now, we find ourselves on page over here. The key concepts will start right now on page 6. So I will stop the video right here and I will go on in the next one. I will see you over there. Okay, until then.